copper. It rose to its highest level in almost 2 weeks. This coming after French and German leaders said that they're going to meet in early November and deliver a plan to stem Europe's debt crisis. So what does this ultimately mean for your portfolio? Well, joining me now for his insight, we have Gero, Senior Vice President, Precious Metals Strategist at RBC Capital Markets. George, always a pleasure. Thanks for coming in.
Thank you very much for having me.
You came up off the floor of the exchange today, right?
You were literally. Actually, happy Columbus Day.
Indeed.
And because of
you have a little fact for us because of Columbus Day, right?
Because it's Columbus Day, that Italy is the #3 largest holder of gold in the world.
#3 largest holder of gold is Italy. #1 is the United States.
And that's courtesy of the World Gold Council, which is a fabulous fact website. And to make
Italy #3,
Italy #3,
U.S. #1,
U.S. #1, Germany
#2.
Yeah.
Who's #4? France?
#4 is France.
And where does China come in?
#5.
#5, the top 5. We've got them.
And it was interesting that China bought gold within the past 2 months. Now, why do they need gold? They don't need gold. They already have a lot of gold. They would like to exchange gold for dollars. So when they buy gold, they pay for it with dollars because they have like $3 trillion.
What, did they think that gold was on sale? It was a bargain? The price was down?
It's a diversification.
Diversification.
Absolutely. It's a very important diversification. And of course, today, gold at 1675 went into positive territory for those who are chartists or technicians, momentum traders. And it was a very important thing for it to close up here and then even go a little bit further.
But why would gold rise in price on the very day when markets seem to be reacting to news out of Europe that say they're going to get their house in order?
Yes, it's a relief.
And the euro rose against the dollar, too.
It's a wonderful relief that nobody has to sell gold in order to bail out any of the countries. Because, of course, Portugal owns gold, Spain has some gold, and everybody was concerned. The first time we heard about Greece, the first time, months ago, gold dropped $50 that night because everybody thought that the ECB or the IMF was going to sell gold to raise money to bail out Greece. Now, none of this ever had to happen. And now, with the general relief in the banking community, and bank stocks doing a little bit better, perhaps you'll find that traders believe there's going to be more money for financing warehouse receipts and commodities that are being held for future sale.
All right, so that's gold. Tell me about copper. Copper prices.
Copper is really had a nice rebound. It came back up. It was up almost 5% yesterday. It was up some more today. We think that probably today, China came back from a week-long holiday. They will resume doing some copper buying. Japan is going to restart, or has now restarted, their automobile assembly lines and building infrastructure after the tsunamis and the horrible weather. We're going to have infrastructure building one way or the other. And of course, this big bailout in Europe, it's stimulus. And what will stimulus mean? It means copper. It means business. Rail car loadings are up, so more copper will be needed to build things. And in every car, there's about 40 pounds of copper and about 400 pounds of copper in every new home.
So if you had to choose between buying the physical metal, whether it be copper or gold, or going and buying companies that dig it out of the ground, what would be your preferred investment vehicle right now?
Oh, I think I would want to buy something for the year 12. I think the year 12 will be a key because all of these better things that
But you buy stocks or do you buy actual metals themselves?
Well, to me, there's a major difference between stocks and metals. Stocks are subject to a lot of different things other than the metal. And I really shouldn't be talking about stocks because I'm not a security analyst.
You want the physical metal?
I believe in the physical metal,
And how about exchange-traded funds versus the actual bullion?
Exchange-traded funds are wonderful, though those people who don't need or can't have futures contracts.
What about institutional investors? Are you seeing more of them come into the commodities market?
Institutional investors coming into asset allocation is the most important thing for institutional investors today.
Because they say a certain portion of the portfolio is going to be dedicated to metals in this sense.
And it was always 5 to 10% gold, but now it's expanded to 5 and 10% additional commodities. So you add additional commodities into a mix, probably some energy ETF and probably some agricultural ETF.
All right, we're going to leave it there. I want to thank you very much, George Gero, joining us from RBC Capital Markets. Thanks for your insights into the world of gold and copper. Thank you.